and welcome to the Your Financial Pharmacist Real Estate Investing Podcast, a show all about empowering pharmacists to achieve financial freedom through real estate investing. I'm Nate Hedrick, and each week, my co-host David Bright and I explore stories from pharmacists all over the country who are achieving their real estate goals while maintaining a meaningful career in pharmacy. Whether you're a first-time investor or a seasoned pro, we're here to provide education and inspiration about the world of real estate. Please note, this podcast is intended for educational purposes only and should not be considered financial or investment advice. Hey, David, how's it going?
Hey, good, thanks. How you doing, man?
I am well, sir. We are right between two projects right now, and they're both on-market MLS deals, which I know people think are impossible. So, but you're wrapping up one as well, right?
Yeah. I know that, we're seeing a lot of headlines and things like that about what's going on in the market, how there's no inventory out there too. But yeah, we just sold a flip property the other day, and we're fortunate to find another rental project to start that was an MLS deal also. So yeah, despite the headlines, there are deals out there, which is good news.
Yeah, and that's actually really similar to our story today. So we brought Jenny and Myke back from episode 4. We're kind of recycling our old guests, which I think is really fun to see where they've gone over the last year or so since we started the show. And they're really growing in both their investing world and in their family. Jenny is pregnant, which is super exciting. And so we really wanted to bring them back on just to talk about the new property that they purchased and what that's going to look like for them.
Yeah, one of the things that I love about what they talk about is they use one of my favorite strategies, which is taking your primary residence when you choose to move to a different primary residence and just keep your old house. That's a really easy way to add a rental property to your long game. So they were able to do that with their prior primary residence. And then even cooler is that in their market, they refer to this as an in-law suite, but essentially a second unit on their new primary residence. It's similar to a duplex, kind of, a separate unit, separate entrance, and that allows them to have that separate space for other uses subject to any of the local use restrictions in that municipality or that area.
And word of caution, before you go and copy and paste anything we talk about on the show today, do make sure that you're checking with your local restrictions, municipality laws, whatever your market allows. In-law suites might be normal for one neighborhood and not normal for another. So definitely check on that. And Jenny and actually Myke refer a couple of times to the types of things that they're looking into to make sure that they can do that. And that's super important. We want to make sure we're doing things by the book and that not just the numbers work, but that it follows the regulations as well. So hope you guys enjoy. These two are always super, super inspiring, and we'll take you right to the show. Hey, Jenny, Myke, welcome back to the show.
Hey, morning. Thanks for having us back.
Yeah, thanks for joining us. We saw all the awesome updates that you guys had and just the life story expanding. And so we said, we got to have them back on the show. These guys are killing it. So
we're excited to be back.
Yeah. So why don't we dive right in? I mean, since we last talked, you guys have made a huge move in a couple different directions. Maybe just update us on what's been going on.
Yeah. So recently we actually closed December 30th on it's what's going to be our new primary house. Couple interesting pieces to it is that it has a MotherInLaw Suite. And so with that, we're going to have a way of making extra income. We really focused on kind of using that for short-term rental. So that'll be a new area that we're traversing into, whether it's going to be Airbnb. We also are close to the military base, so that might be part of it. We're also really close to one of the hospitals here. And so we might be doing travel nurses. With that too, we have our current primary house, which we haven't moved out of yet, but we're going to be turning that into a rental. So lots of different moving parts that we're trying to get situated right now. And hopefully we'll be into our new house and getting that established probably here in the next month.
That's awesome. There's so many moving pieces to that, but it shows how important it can be to buy that single family home and start to build equity in it and the things you can do once you start to expand. I mean, you added one property to your portfolio, but you're adding really 2 more opportunities and a great new place to live. So it just shows how important it is to, once you get in, it starts to build on itself. So that's really neat.
From our previous one, I know a lot of people know that Myke's military, so we actually are able to use the VA loan, which is another interesting thing. And we wanted to get the most bang for our buck by using the VA loan. And so when we were looking into new areas to move to, we wanted to make sure that we were adding value or potential income. We've looked at multifamilies in the past, but living that close with like long-term tenants, we kind of weren't really into that because we have 3 dogs and usually they don't have yards. And so this MotherInLaw Suite actually offered a really unique opportunity because it has a separate entrance. So we don't have to worry about someone sharing our house with us. It has its own door, own backyard. So that was what was really cool about how this was able to be utilized. And then using the VA loan is just an amazing benefit for our veterans and for active duty.
No, very cool. I love the number of moving pieces on that and how you made them all fit, which I know can be intimidating to a new investor, but I think as pharmacists, we're used to juggling like 20 meds at once in a patient, making that all fit together. So hopefully we can make this fit here today. So I'd love to kind of break this into steps and talk about some of the decisions that you made along the way that made this a good fit for you and for your family. So if you could talk for a minute about the decision to keep your old house as a rental, because I think standalone, that decision fits a lot of people, whether they move into a house that has a rental component or not, or VA loan or not, or those kind of things. The decision to keep a former house as a rental is one of my favorites. It's one that we've done before, and I love that. Why was it a fit for you both?
So obviously our niche is, buy and holds, long-term investments. And so there's quite a few reasons why we decided to hold on to our primary residence. For one, the appreciation for the house is steadily going up, but not the same rate as, say, our past house in Washington. So we're obviously sitting on it to, let it grow, let the value grow. Not only that, we are in a premier neighborhood in our area, and we know that it's going to garner quite a bit of income for us. So there really wasn't any good reason to get rid of it. And there's no value lost. We know, especially compared to, how much the mortgage is and how much we could potentially get for the rental costs, it was almost a no-brainer.
We also knew this going in that we were going to keep it as a rental property at some point and try to reuse the VA loan. So we actually refinanced this house back over the summer when rates were killer. So we actually refinance from 4.25 to 2.25 and cut about $200 off of our mortgage payment, knowing that if we had the opportunity to use the VA loan by decreasing that monthly payment, that was only going to improve our cash flow.
Yeah, that 2.25% interest in a long-term rental, if that's a fixed rate and things, I mean, that's just killer. So can you walk us through the numbers a little bit more of what that payment is, what you're expecting to get for rent, and then how you justify that? Because Myke, I like what you're saying about the appreciation. I think that's something we don't talk as much about. I think that from the long game, if you're going to hold that for a long period of time, makes great sense. But even in the short term, the security of that cash flow, if you could talk us through that for a minute.
Absolutely. Yeah. So we were able to drop our mortgage payment down. It was about $1,450, and we dropped it down after the refinance to about $1,200 flat. So that was a savings of about $200. And we've already spoke with our property management company, and they think we could get upwards to
2,000.
Exactly.
Yeah. And that's something that we've gone back and forth on for property management. But as of right now for this show, I'm 7 months pregnant. And then with all the other stuff going on, we decided to go the route of the property management, at least initially, just because, again, we know the time that it takes to get in a good tenant, and our property management team has been phenomenal. And so we are happy to lose that 10% of the income because we know that cash flow wise, it's a newer house. We don't have any big repairs or unexpected repairs coming up. And so again, we think that that return on that investment by using property management will benefit us in the long run.
Yeah, and I think that math helps with that too, because if you were telling me that your payment was $1,800 a month and you could rent it for $1,900 a month, suddenly the property management squeeze really hurts, right? But with the spread between $1,200 a month mortgage payment and $2,000 a month rent income, yeah, it's much simpler to carve out $200 a month for a property manager to just handle it, and then you collect the rent and not collecting the headaches. So
Exactly.
I love that. From an appreciation standpoint too, I know one of the things we've talked about on prior episodes, particularly from a tax standpoint, is there is that, at least at present, there are those exceptions where if you live in the house for 2 out of the last 5 years or whatever those specific rules are, that you can sell and not pay tax on the gains of the house. So when you talk also about appreciation, I didn't know if you were thinking, we're going to hold this for 30 years, it's going to double or triple in value, we hope, or are you thinking more of that short term, we're going to ride out a little more of this appreciation and then sell while there's some tax benefits to that?
I think Myke and I both have seller's regret for our house in Washington. And so I don't think we'll sell another house like as we continue through our real estate journey. I know there might come an opportunity when that's a thing, but as of right now, everything that we collect, we are going to be holding it for the very long-term future, unless, obviously something happens to change that.
And that's not to say that there wasn't opportunities that opened up for us with the sale of the house in Washington. But again, knowing what we know now, we know that that's not necessarily the move that we want to make again.
Yeah, especially if you can pull it off, right? Where you can purchase that new home without having to sell the old one. I mean, it can benefit you in the long term. So walk us through that a little bit too. How did you use a second VA loan or what is the, how does that work for someone using a VA loan when they're buying a second primary residence on the same loan itself?
With the VA loan, there are loan limits, and this is by county. So every county has its own specific loan limit. Usually the standard in the United States is about $650,000. High cost counties sometimes can be upwards to $1 million. And what the loan limit is it's not necessarily a maximum amount that you can have financed. That's just typically what the lender is comfortable with financing for you without you providing a down payment. So that's also another plus, is no down payment. Also with the VA loan, no mortgage insurance. Now what they do have is a VA funding fee, and it's a one-time fee that you pay to the VA. Usually you can pay it at closing, or you can have it just lumped into the loan. And this is kind of a form of mortgage insurance, but it's usually at a much lower rate. And then of course, you can get a much lower interest rate of the loan versus other loans out there.
And so the benefit of using the VA loan is, as Myke said, there's certain amounts that you can have per county. So if you were strategic with it, you could take out, like, for example, like our primary residence was about $180,000, and that's Mississippi. But if you live in that property for a year, then the next year, as long as you still qualify for the loan, because they still do credit checks and all that, they're not just handing out free loans, but as long as you qualify for it, then from there you can have another property. So we had our first house for 180, and so if you take, I think what it's 650 or 625 for this area, and you subtract that out, then that means that's how much we still have allowed to use for the VA loan as long as you qualify for it, which we did. And so that's where now we've taken a second portion of our VA loan, and then depending on how we play things, we might consider again in a year looking to see if we can find another one to finish out the rest of what our VA loan allows.
Yeah, I love that. The VA is almost like having a line of credit, just sitting out there waiting to tap into it. As long as you qualify each time, you get to tap into that credit and max it out if you need to, which is really, really cool.
And there's even more benefits if you're like a service disabled veteran. Theoretically, there is no loan limit. You can finance however you want, no down payment. Same thing with the funding fee, depending on your percentage of disability, the funding fee is waived. So yeah, the benefits just go from there depending on, your situation.
And something that, again, I think I almost glossed over, but like we need to reemphasize too, is that there's no down payment and no PMI. We talk all about these like physician's loans, pharmacist loans, all these great advantages, but it's right in front of you. Like you have access to this with no down payment and no PMI. Even with that funding fee in there, it's still just an outstanding way to tap into capital that most people don't have access to. It's really, really awesome.
Which is why we knew we had to take advantage of it a second time. We've just we knew that. And that's, again, why we went ahead with the refinance on our primary. We just, with how hot the market has been, it took us a little bit longer because we've been in our primary residence for 2 years. But again, we weren't going to jump into something that didn't make sense or wasn't going to bring value to us. And so that's why we kind of patiently waited, and then this opportunity came up.
Yeah, talk to me about that. With the hot market too, was it difficult to find that new primary residence? Because with my clients, a lot of times if they're VA, sometimes FHA or even USDA, the sellers don't look at those loans typically as favorably as a conventional loan because there's, maybe an extra inspection window or something else that goes with it. Did you run into any struggles with that where you were getting beat out by other conventional offers, or was it not a problem?
Surprisingly, we didn't. I think part of our luck was that we found this house during Thanksgiving week. And so we actually went to look at it on Tuesday, put in an offer on Wednesday, and then we're under contract Friday. So it was like during holiday week. So I think that might have been like one of our saving graces, is because this neighborhood and the location of the property is actually a really very, very hot market. And so, we kind of just prayed on it and said if it was meant to be, it was going to happen. And it worked out because we actually even offered under what they were asking, which we were kind of worried about too, but it ended up working out. And so, yeah, the market has been pretty competitive, which is why it's just taken us a long time to find anything. And then again, the MotherInLaw Suite was something we've recently started pursuing after I went to a real estate conference earlier in November, just because, again, it's a little nicer than maybe a duplex or a fourplex, but we still get that added income.
Yeah, that just shows the importance of being ready to take action. You guys saw a property, even though it was the holiday and it wasn't like, oh, we'll wait, we'll think about it. No, you guys jumped on it. And that ability to move quickly was rewarded, which I think is super important and something that shouldn't be overlooked.
Yeah, I think the biggest kind of theme of this situation was just opportunity. Because really, honestly, for me, it took me probably maybe a day to kind of be in the mentality that, well, shoot, we could be out of our house in, a few months from now. Because we love our house. Like we honestly don't want to move. But again, the opportunity was there. And we saw the way that we can kind of capitalize on the situation. So we wanted to make that move. And at the same time, we weren't going about it hastily. We were still, checking our options and seeing if it will truly work for us. And I believe that we made the right move.
Yeah, and I was a little bit faster. I think 10 minutes into the house, I was like, I want this house.
You knew right away. I love it.
No, and it sounds like part of that attraction was that in-law suite. So can you walk us through kind of precisely what that is, how that differs from a duplex? I mean, clarifying, it doesn't sound like you're going to actually rent this to in-laws, but this is more of just like a short-term rental, that kind of thing. So can you kind of explain the floor plan layout, how that works?
Yeah, so actually we found out after when we were already in the process, but so the house was a standalone house and the owners, her dad is actually a licensed contractor. And so about like 5 or 6 years ago, they went and got everything permitted. And so he built on the addition. The reason why the addition was such a selling point for us is it has full kitchen, full living room, has hookup for laundry, 1 bedroom, 1 bath. And so it's like literally a standalone apartment. The other thing for us was we've considered Airbnb and travel nurses in the past, but we again have just been hesitant to have someone coming in and out of our own house where we live. I know a lot of people do it. We have 3 dogs. We just never wanted to have, the headache of that and, always being worried about what could potentially happen. And so the fact that this had its own separate entrance, has its own little patio, again, is a standalone apartment, we were like, okay, this we could actually do. With the upcoming baby too, then we were kind of like, well, this is nice, where we leaned more towards short-term rental because, right, we can book off. If we have family or friends coming in, then that MotherInLaw Suite will be for them. And then when we want to have tenants or people coming to stay, then we can open it up. And we don't have to be concerned about having a long-term tenant in place. And so that flexibility was really the selling point for us. We've also, like I said, wanted to do Airbnb for a while. And what better way to do it than having to do like cleaning and all that stuff? It's like literally right next door. Should be easy to manage. It's not like a big, it's not like a house where we're going to have like 10, 12 people staying. Like the max occupancy is going to be about 4 people.
Yeah, I mean, that definitely simplifies. I know that some people feel like at some point in life they kind of want to graduate from that like shared walls experience of they don't want that. I at least in my area, a lot of duplexes are 800 to 1,000 square foot, and so people want more space in that. And this feels like a opportunity where you were able to get that more of a bigger house to fit the growing family and not have to worry about some of the long-term tenant issues. You did mention permitting. So in your area, does something like this require any other kind of rental compliance or certificate or anything like that in order to rent it out?
Yeah, so that's what we're in the process of looking at right now, which is again why we wanted to make sure we had a couple options, because it looks like Airbnb might take us a little bit longer to get into, because the city of Ocean Springs is a super popular area here in Mississippi. And through them, then we actually have to be permitted for Airbnb. We do not have to be permitted for anything that's medical. So like travel nurses, anything over 30 days. And so that's where we were like, okay, well, worst case, if Airbnb takes a while or we get some headaches from them, like we can easily transition. And then the same with being a faculty member at a pharmacy school, we have students that are coming on 6-week rotations. A lot of them have to commute. And so that was another option. So as long as it's over 30 days, we don't have to have it permitted. And so that was, again, where we had multiple exit strategies. And then again, we could also even do long-term, worst case, if all else fails. So we have multiple options to go with.
No, I think that's super important that the multiple exit strategies for, safety-oriented, risk-averse pharmacists. We talk about that all the time. So I love the multiple exit strategies, multiple options that you can do if something were to not be a fit. And I also appreciate the thoughtfulness behind looking into all the regulation, because that seems to be varying drastically in different places, particularly with the Airbnb model. So I think that's huge there also. From the kind of short-term rental as a part of the primary, any other just like tips or anything that you want to throw out there for someone that's like, hey, I wonder if I could do this in my house?
Well, I think we'll kind of learn going forward, but I think for me, the most important thing was just being comfortable. Like I said, for us, it was still possible to do short-term rental. There might be other options for people, like if they are comfortable with renting, because I know some people's houses kind of like separate, or they might have like a second entrance. Like keep that in mind, like being creative when you're looking at properties. So, we have still been on the hunt for regular rental properties, but they've just been flying off the market. So when I went to this real estate conference, they had a speaker coming from California who talked about a lot of like the ADUs, or the accessory dwelling units. And so that's kind of what helped me trigger to think like, okay, so maybe if I can't find duplexes, fourplexes, like how else can we use this? And so again, just get creative. Everybody's kind of struggling in this market to find properties or to move fast enough. But again, if you think of things maybe outside the box and even short-term sacrifices, again, like we'll see how the Airbnb goes. You guys will have to talk to us in like another year to let you know how the short-term rentals go. But again, the flexibility of being able to say we want tenants, we don't want tenants, that was something that definitely sold us.
Yeah, that was definitely a huge plus in my opinion, because I feel like we've kind of wanted to try to experiment with, having some short-term rental probably as early as, 12 years ago, being in Arizona, just having someone rent our room out in our 4-bedroom house. But again, it was kind of the privacy thing. It was kind of our dog situation. And so now that we have like a truly efficient way to, kill these two birds with one stone, still have the privacy of our primary residence, but also, capitalize on, the cash flow, or the potential rather, of short-term rentals. That was a huge plus.
Talk to me a little bit, you mentioned this before too, about it being so close that you can do a lot of the cleaning and things yourselves. Is that the plan for at least the beginning, is to not hire that out and to take on the management, tenant interaction, the guest interaction, I suppose, and the cleaning, all that stuff yourselves for a while, if the Airbnb route does pan out?
We have both figured out. So initially I would like to try to do the management myself. The cleaning, I'm not opposed to. So our unit, I think, is like 700 square feet, like the MotherInLaw Suite. So it's not terribly big, but we've also had established relationships here with a cleaner. And so we actually had her come by to check it out. She's already given us quotes. And so it's going to be about like $40 to clean it, which is going to be just the fee that we add on to the Airbnb. And so it all ended up working out. And so then if I choose to do it, or we choose to do it, then that's just additional money in our pocket. However, again, we try to look at all avenues. We try to incorporate, does this make sense if we add in property management? Does this make sense if we add in a cleaner? So we look at all of those, because we just never know And again, with a kid coming on the way, we just never know what time is going to allow us. And so we wanted to make sure it made sense however we did it.
Yeah, I'm looking at the room around me and all the kids' toys that are laid around. And so I'm like, if I can't even clean my own living room, I'm not sure how you guys are going to clean an STR next to you. But
yeah, so we figured it out. And like I said, we had a great cleaner, and she's very reasonable. And so she's already been by to check out the property and given us quotes. So
I think what's so cool, and what again, people that may not be paying attention might have missed, is that you guys really mapped out every different option, right? It's not just, I don't know, we'll figure it out. And then, oh shoot, it doesn't actually work with the numbers now that we're down, halfway down the road. Like, you sat down and said, okay, if we do it ourselves, here's the numbers. If we have a, management company, here's the numbers. If we have a cleaner, here's the numbers. That is so, so important in whatever you're doing, whether it's a short-term rental, long-term rental, all those things. Map out those strategies, because you don't know what it's going to look like in 5 years. Even if the goal is to always manage my own long-term rental down the road, it should also work with property management, because what if I move across the country for another job, So those are really important things that I'm just pumped to hear you've already done, because it's so essential to making sure that this is going to be a success.
Well, and don't get us wrong. So there's still a lot of unknowns, and I think I'm probably a little bit more okay with risk than Myke is, but I think having a vision and seeing potential, and just not getting bogged down with all the details, right? So like some of the stuff we've kind of been figuring out as we go, but the initial point was that the numbers worked. And then from there, it's just trying to figure out like, okay, what are the small details? And then just having like exit strategies. And then from there, like we know that we're going to have trials and tribulations. There's going to be things, because it's all new, but just don't get so bogged down in the little details. Again, like kind of look at the big picture. And from there, then you can figure out those small, minute details to make sure that you get the most bang for your buck.
Yeah, that feels like a really healthy balance in how to get started, making sure that the big picture works, and then you can kind of figure out the small details. You can tweak it. You can do some science experiments along the way, learn what's a fit for you, for your risk tolerance, a lot of that. You did mention too that you seem to have a goal and are keeping an eye out for other long-term rentals. So I'm curious, since we talked, not quite a year ago, but since we talked a bit ago, what kind of things have you learned, and how has that changed kind of your criteria? What are your criteria for your next houses that you're looking at for long-term rentals as well?
I think a lot of it, we're still primarily looking at multifamilies. We look at single families. I think our biggest thing with the market, how it is now, is we're just not looking for hefty rehabs. And that's just because of the issue with contractors, time is money. And so that's kind of obviously narrowed down our window. And then again, because of how quick things are going. But we've also noticed, and I'm sure you guys have probably noticed, is that people are offering like ridiculous amounts of money for properties that they're probably not worth. And so Myke and I mean, it's easy to get pulled into that. We have to bid on something because everything's going. So we've just kind of been sitting patient. Like we know at some point something will shift, or, we'll find something off market, which we actually do have something like off market under contract right now. It's just that there's like a probate issue we're trying to work with. But we've really just been focusing on making sure that it's still a good deal, and not to just get caught up in, oh, we have to get a rental property now, we have to get this, like we have to take advantage of the rates. And again, for us, a good deal is a good deal if the numbers work. We don't want to jump into something just because we're in bidding wars, or if it doesn't make sense. If this property, say we had been in a bidding war, if it would have gone over what they had been asking, we probably would have backed out, because then the numbers were starting to get really tight and not making sense for us. And so again, biggest thing is focusing on the numbers.
Yeah, that's great. I love that. And it just shows that if with a little bit of patience, you wait for those good deals to come around, and then you can pounce when they do show up. So great advice. And again, really awesome having you guys back on the show. Really appreciate you guys sharing an update to your story, and just all these great tips for ways to get creative within your own single family home, within your own primary residence, and ways to go even beyond that. So appreciate you guys sharing, and just awesome to have you back.
Yeah, thank you guys.
Thanks so much.
Thanks for listening to the YFP Real Estate Investing Podcast. If you like what you heard on today's show, please leave us a review and subscribe to the show so you never miss an episode. If you have a question, know someone that would make a good guest, or want to connect with Nate or David, head on over to yfprealestate.com and join the growing YFP Real Estate investing Facebook group. As we conclude this week's episode of the YFP Real Estate Investing Podcast, an important reminder that the content in this podcast is provided to you for your informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with a financial advisor with respect to any investment. Furthermore, the information contained in our archived newsletters, blog posts, and podcasts is not updated and may not be accurate at the time you listen to it on this podcast. Opinions and analyses expressed herein are solely those of your financial pharmacist, unless otherwise noted, and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer. Thank you for your support of the YFP Real Estate Investing Podcast. Have a great rest of your week.